Good afternoon, everybody. We're going to be speaking in English because we have, we're fortunate today to have who's from Japan. So we need to speak in English, but there is interpretation in Arabic, right? Can we confirm? Okay. So whoever is not very comfortable with English, I will kindly ask him to actually, can you put the code up, please? So they're going to put the code up and you can get live translation in case you are, your English, Arabic is better for you. So my name is Kamel Kholy and I'm really happy to be with you here today. I am an impact angel investor. I am also a strategic projects director working for a multinational energy company that is focusing on energy transition. And I am also a partner in a $10 million micro fund focused on early stage investment in tech and tech-enabled startups. It's called Alexandria Ventures. And I am happy today to be with three very distinguished panelists. We will start with a quick round of introduction of each panelist and to confirm their experience and why their experience is applicable to actually attracting and retaining investment, which I think is a very interesting topic for founders and even for us as Egyptians. We all want to attract investment right now. So, Christine, do you want to start, please?
Hi, I'm Christine Sedky. I manage Tiye Angels, which is a female angel investment network. We work on both sides of the equation. We help female founders become investment ready, and we help support more females to become investors. I've had the privilege of working in the entrepreneurial ecosystem here in Egypt for the past 10 years. So it's been really exciting to see it transform from, very minimal incubators, accelerators, and VCs to now there's quite a few. And I've been working the past couple of years particularly with female founders. Thank you.
Assalamu alaikum. I'm Sada. I'm the founder and GP at Sunnyside Venture Partners, which is the newly established fund, and it's the first Japanese VC which specifically targets Egypt and North African startups. I also moved to Cairo end of May last year, so it's been 9 months since I started to live here in Cairo. It's been amazing to live here. So far, we have made 7 investments, and we are sector agnostic. We target pre-seed to seed stage companies. And I'm so happy to be here. Thank you.
Assalamu alaikum. I have to do it after you did it, so yeah. I'm Amr Elselouky. I've been doing edtech startups for almost a decade now, and I'm on this panel because I've tried being the founder, raising funds, and I've tried working with a VC and managing a portfolio of edtech startups. So I've seen the pitch deck being thrown both ways. One time because I'm looking for the money, and another time because I'm looking for how to deploy the fund I have. So hopefully this panel will try to share some insights on how to really understand the conversation both ways from both investors and founders. Yes.
Thank you, Amr. And one thing I want to mention also is that Christine has kindly agreed to step in and join the panel. I contacted her yesterday. We were planning to have Marion from the Philippines. She was going to invest, and then she had an issue and she couldn't show up. So I said we cannot have a panel about entrepreneurship without having female panelists. We didn't want to show up all of us males because we really feel very strongly about the role of females in any aspect of life, and especially in entrepreneurship. So with that, I will move on to start the panel and to give you and the panelists some tips and a big picture about how to attract and retain investment, which is extremely important for the success of any startup. So some figures for you out of interest. So in 2014, $50 million were invested in startups in Egypt. $50 million. In 2022, last year, that figure was $520 million. So it was a 10x in 8 years. That means that things are advancing quite well, and it speaks very positively of the Egyptian ecosystem. And actually, in 2025, it is projected that there will be $1 billion of investment in Egypt in startups. In 2014, there was, a few venture capital firms. In 2022, we have 35 VCs that are based in Egypt and focused in startups in Egypt. So for me, that is, very positive figures. But having said that, we have to admit that things have taken a turn in the last few months in terms of VCs wanting to invest in startups. And I think this is not something that is applicable to Egypt. This is a worldwide phenomenon. A lot of startups were focused on, or a lot of VCs were focused on growth and blitz scaling. And they wanted to see growth at any cost. But now things have changed. VCs want to see more cash-efficient startups with healthy unit economics. And I think this is a change that we just need to make sure that we understand and be agile and adapt to. So these are the statistics. And I want to start with you, Amr, if you don't mind. And we want to talk a little bit about pitch decks. So what are the common pitfalls that you see? Amr has a very nice and unique experience. So he started up as a founder, and then he became an investor in a venture capital firm, and then I guess he missed being a founder and went back to being a founder. So I think that's a very unique experience of somebody having done the two sides, and can tell us a little bit about the common mistakes or pitfalls that you see when investors are very excited. And we were talking about the emotional trap from Shihab in the previous presentation. A lot of startups, they fall in love with their startup, and when they're pitching about it, they sometimes miss important points to the people that they are pitching to. So Amr, based on your experience being on both sides, can you please share some of the pitfalls that you see?
Sure. First of all, when I was doing investment, I really missed being a founder, and that's the main reason I came back to the kitchen of founders. So the biggest single-handedly from my experience in the VC, the biggest mistake is actually not in the pitch deck itself. The pitch deck isn't really the biggest problem. The biggest problem is you assuming that the same pitch deck with the same angle can be sent out to any VC all around the world. That's a major issue. So the thing is, we always thought there's an appetite for each VC. كل VC لها طعم معين. So some of them like early stage startups, some of them prefer certain industries, some of them they don't like first time founders. So that's actually the biggest problem. That before even then got the pitch deck, you need to do like some sort of business intelligence. And I think actually a common culture. So in Egypt, a fresh grad would send out their CV to any multinational, to increase their chances of being hired. That is a wrong methodology. Actually, we call this pray and pray. Pray and pray methodology never works out. So I would say that the first problem was always irrelevant pitch decks. We are interested in fintech and edtech Series A startups, and I'm getting a pitch deck about e-commerce by like a pre-seed looking for $100,000 in ticket, and I provide $1 million. The initial interaction, خلاص, done. It's a failure. I would say this is single-handedly the biggest issue. If I would highlight the solution for this and move on, because we will get to talk a lot about pitch decks, the solution for this is to always ask around the other founders that you know in the scene, which VCs are more interested in what I do, in terms of the stage I'm in terms of the industry I'm in, and look at their portfolio. Know more about what they invested in previously. So this is, in a nutshell, the biggest umbrella I have.
Thank you very much, Amr. I completely agree with Amr about this point. It's empathy also, understanding the person in front of you and connecting with him. We were talking about emotions in the previous presentation, and investment in a way is also has an emotional aspect to it. Do I trust this person? Has this person given me the right signals? So thank you very much, So moving on to, again, a topic that is very dear to me personally, which is inclusion and having inclusive teams and the power of inclusive teams and getting more female founders. So, Christine, would you, being part of an angel investment network that is helping female founders, would you like to comment on what you have seen in terms of the power of having diverse teams and the value that female founders bring to the ecosystem as well?
So the data shows that if you have a male team, female teams do 2 times better, diverse teams do 2.5 times better. So that's really what we're trying to do with Tiye Angels. We're trying to make both the founders be more diverse. When we ask for female founders, we ask that just at least one female has meaningful equity or is part of the C-suite, and same thing for the investor side. So we are looking to add more female investors to the investor pool. Because this is something that's across the world, actually. So only 5% of VC funds go to female founders. So when we're promoting diversity, this is what we're trying to do. And we've also found anecdotally, other than the data, that females bring something different to the table. They ask different questions. Female founders also can find that female investors understand different products, different services that are made for 50% of the population. So this is kind of just part of our promoting of diversity.
Yeah, I actually agree. If you think about it in terms of numbers, I always like to look at the numbers. If you look at the number of, you have 50% of the population obviously is male and the other 50 is female. So the number of female founders, do you have any statistics on the number of female versus male founders? I mean, I am sure that it's something like maybe 1 to 7 or 1 to 10 or something like that in terms of female founders.
So actually, we started Tiye because when we looked at the Egyptian ecosystem, we saw that at the very early stage of entrepreneurship education, you have 50 to 60% female participation, and this was all over the country. Upper Egypt, all over, Asyut, Aswan, etc. And then you move to the percentage of incubation of female founders, it's between 10 and 20%, and the number of investors, female founders getting invested in is even less. So it's a very sharp downward curve.
So I think the point here is that female founders to me have a great opportunity to actually attract investment and actually be successful in startups because they are catering to needs of 50% of the population, and there is a lot less female founders compared to male founders. So I would encourage females to step up and continue, and networks like Tiye are ones that are supporting them. So I will move on now to you, Sada, and one thing, before the panel today, I was speaking yesterday to Sada, and Sada said that he went through 200 pitch decks as part of his VC, and And I'm actually very happy to have somebody from Japan that is bringing us a different perspective. Most of the perspectives we normally get are either from Europe or the US. So having somebody from the Far East come and give us their points of view and how they see the ecosystem in Egypt and Africa is very interesting. So the 200 startups that you actually went through, Sada, how did you see the importance of clear and precise communications of startups, and how did this impact decisions on which startups to invest in and which startups not to?
Thank you, Kamel, and it's a very interesting topic to talk about. So, I have gone through more than 200 pitch decks, and I have met more than 150 companies since I came here in Egypt, so within 9 months. And I'm going to talk the importance of briefness in terms of two ways of communication which startup do, which is one is pitch deck, and of course one is the meeting. So the pitch deck, what's the objective of pitch deck? To me, it's not to convey every single thing to investors and let investors invest just because of pitch deck. No. The objective of pitch deck for me is to let investors get interested and to move on to the conversation or meeting. With that said, I have looked at very briefly the pitch decks I have gone through. The minimum number of slides of pitch deck was around 10 slides. And it goes up to 30 slides. But I'm not saying number of slides are important, because some companies put a lot of information, a lot of content in one slide. But some companies just have one word in one slide. So the number of slides doesn't matter. So what matters, right? To me, three tips I think. I think there are three tips or three characteristics which I thought is a good pitch deck. One is maximum 10 minutes read. I'm talking about maximum. It can be 5 minutes, but I think max 10 minute read is the good amount of information you put in the pitch deck. The second thing is you can let investors remember three things. At least three things. You don't have to tell every single thing in the pitch deck, but you want to emphasize by making the pitch deck more brief and focused. You can at least, after reading this pitch deck, at least as an investor, if I remember three things about the company, that's a good pitch deck, I think. And last but not least, let investors think of some questions. That's the also very important characteristic of pitch deck. If I read a pitch deck and if I understand everything, I forget. But if I read a pitch deck and I come up with some follow-up questions, that means I'm already engaged in this company and I want to have a conversation with that company. So those three things, max 10 minute read, three things to remember, and let them think of the questions. Those are the three tips I think for the good pitch deck. And when it comes to meeting, right, the tips for the meeting is also the same thing. Let's think what investors want to hear instead of what founders want to say. Of course, founders have a lot to say, which I understand, but if we consider what investors want to hear most, then if you focus on those points, I think the meeting will be more fruitful. And of course, investors have a different perspective and different focus when it comes to what they want to hear. But for me, speaking from a sunny side of venture partners, I have 4 things which I want to hear when I have a meeting with startups. One is about founders' passion. I really make the importance of founders' passion, because I'm investing in pre-seed and seed. Business model can change, macroeconomy can change, but what is not changing is a founder. I talk to founder, and if I found the founder has a great passion, even the pivot happens, it tends to do well and sustain a lot. So that's why founder's passion is very important to me. The second thing is about market potential and scalability. Obviously, we are compensating the risk of investing in this market instead of the US or Japan or Europe by huge upside. So I need to see a very big potential for the market and the scalability. The third thing I make the most of, make the importance of, is about the customer's pain. So I really focus on what's the pain this company is trying to solve. Who is the customer and how big is the pain of this customer is very important. If there's some opportunity to make money and then that's why they are doing some business, I understand, but I tend to prefer that there is some very, very sense of urgency to solve someone's customer's pain. If this pain is very big and very sticky, I think business can go well. So I always try to assess the size of the pain or customer's pain they are trying to solve. And last but not least, I'm trying to assess additionality. When it comes to additionality, which means what's the things this startup is doing and something that others cannot do? What's the thing this company only can do? So that's additionality, and it can be translated as uniqueness, it can be translated as competitive advantage, but I really value with the company with high additionality. So those are the 4 tips I always try to understand when I have a conversation. Because I'm from Japan, I'm an international investor. It's very important to focus on the topics you want to talk, because most of us are not native English speakers. I don't understand Arabic. I'm still learning how to speak, how to listen to Arabic. But if you be concise and brief and focus on the topics which investors want to hear, this will help you raise from international investors for sure, because international investors don't have any bias. We will assess the company, but by what I'm listening to. I don't judge by any preconception. I will judge by whatever said in the pitch deck and whatever said in the conversation, which means if you have a focus in the conversation, in the pitch deck, it's going to be maybe neutrally unbiased conversation you can have with international investors, and sometimes international investors are good targets for you to raise from, because you can be unbiased and neutral.
Very interesting. Thank you very much, Sada. And actually building on what Sada is saying, personally, as an angel investor, one of the things I always look at is healthy unit economics, right? Is this startup, does it have healthy unit economics or not? And how cash intensive is it? If it has a very high burn rate, like it continuously needs funding rounds, this is something that gets me a little bit worried. So it's, there is a lot of literature that is written about customer-funded businesses. Businesses that, based on their business model, of course they need investment from venture capital firms and from strategic investors, but most of the funding needs to actually come from the customer. When the customer decides to put his hand in his pocket and pulls out money and gives it to you, this is the biggest validation for your project. Anything else is less of a validation. And there's, for example, a very interesting book from a professor in London Business School. His name is John Mullins, and he has the book called Customer Funded Business. And I would encourage anybody to read this book, because it's very applicable to the time that we are in, and the fact that a lot of the VCs, the appetite is about having startups that are cash efficient. I think this is important. There is another concept from Y Combinator. The concept is called default alive and default dead. So it says that if your startup, unless you get funding, your startup will crash and you'll get bankrupt and you cannot continue. That's the default dead. The other one is the Default Alive, which is a startup that is growing. If it gets more funding, it will grow faster. But without the funding, it will continue to grow at a slower pace. And this concept of default dead and default alive is actually a concept that was shared with us yesterday in one of the workshops, and I found it really interesting. So again, retaking the topic of pitch decks, Amr, based on your experience, when we talk about pitch decks and the importance of, I think you touched on this very briefly, on targeting certain people, customizing pitch decks for specific investors. How important is this to the success of actually getting the funding?
Right. I'll answer this question, but I want to look at it from different perspectives, right?
Yeah.
Right. First of all, let's assume that I found the microphone work.
Yes, I could. Yes.
Let's assume that I know. الو شياكة حاجة شياكة خالص. I'll translate that after. طيب, let's assume that I know the right VC. I know I'm gonna go to, I don't know, Algebra. I'm gonna go to 500 startups. I know they're interested in what I do. I have the passion, as you mentioned. I understand the pain points of my customers. I did my homework and جاهز. طيب, what's next about the pitch deck? What we learned by experience from a founder's standpoint is you don't have one version of a pitch deck. You have one that you should know that it's being circulated all around the MENA region. Yani, if I have a pitch deck and I put super confidential data, financials, you need to know that this pitch deck that you send to one VC, I can assure you, it's in the hands of everyone in the MENA region. So what does that mean? You have an initial pitch deck, the 5-10 minute pitch deck, and then when you go into an in-depth level, you can add more data, we call it the data room. Put in your financials, your breakdown, your burn rate, بنصرف كام في الشهر وكده. So point being, I think many people try to fit so much data into one pitch deck, which means so much time, and investors lose interest and loss of confidentiality of data. So this is number one. But what's the problem of losing confidentiality of your data? If I'm a VC, I have a portfolio of startups, and one of them could be your competitor. So I have access to your data, I can supply, but Amr, this is unethical, this is wrong. I'm not talking about what's wrong or what's right from their standpoint. As a founder, you need to be aware. That's do your homework. That's point number one. And unfortunately, there are wrong practices across industries all over the world. It's nothing against VCs or غيره. So this is point number one. Point number two is that you need to know that the pitch deck is constantly a work in progress. You should know that every month, when you finish the month and you look at your growth, of course, I'm head of growth in my company, I look at growth every single day. It's part of my job. But if I'm gonna, as a founder, if I'm gonna say, okay, February is over, half Q1 is over, so now I need to update my data room, which means I need to update my pitch deck. Why does that? Because early stage startups, every month you learn something new. Not only increasing in traction or GMV or the number of users, you might actually pivot your product, might actually look at the problem you're solving from a different perspective. So when I see a pitch deck from a startup that I met 6 months ago, and it's exactly the same, I'm genuinely concerned. You haven't learned anything? I'm not against it, but I'm skeptical. Nothing changed. You didn't figure things out. You didn't crack a different market. Maybe you didn't double down on what was working. So for me, the pitch deck is a work in progress. And the end in mind from my point,
it's not a static document. And the third thing I want to mention on the pitch deck is that some founders assume that being a founder means 90% of my time is raising funds, which should never be the case. I see founders that spend so much time on their pitch deck and so much time on their data rooms, and they don't have time to manage their company. They don't have time to hire the right people and fire the wrong people. They don't have time to look at different markets and learn from the good case practices in their industry. So if the pitch deck becomes a full-time job, if raising funds becomes a full-time job, I would say this is a red flag. It's not a general rule. I mean, we live at a very, very tough time when it comes to global recession, the economy, raising funds is really hard. So founders are on alert. Everyone's trying to raise funds. Actually, after what happened a couple of days ago, the Silicon Valley Bank, everyone is genuinely concerned. VCs are scared to deploy. Startups want to raise funds today because they know that tomorrow there won't be any funds going around again. But point being, no matter what the situation is, as a founder, managing the company is so much more important than managing the pitch deck. So these are I would say, some hands-on comments I've seen from actual founders in our region. I would say that pitch deck is just a spark for interest. Once I finish the pitch deck, I want the investor to be like, hey, I like what you're doing, I'll give you a call, or let's meet up. That's it. If I try to feed in everything, definitely I'm doing something wrong. So this is in a nutshell what I have in mind.
No, thank you very much, Amr. Very insightful. And Christine, from your side, talking about pitfalls and customizing pitch decks. When, for example, somebody's pitching to Tiye angels versus others, based on your experience, what are the takeaways, or what is the tips that you would like to share with everybody here about pitch decks and about getting people interested in investing?
I think there's two parts. I think that since angel investing, you were the first investors, sometimes people are not aware of what investment looks like and the differences between angels and VCs. So I think kind of like someone mentioned, I think Amr before, get in touch with other founders, ask people around and understand more of what the investment looks like and the difference between that angels are individually putting their own money and VCs, people are using other people's money so they have a mandate, and understand that mandate. Just as was mentioned before, keep it simple and understand kind of the investor that you're speaking to.
Thank you very much. And actually, Sada, the point that Amr mentioned about dedicating 90% of your time, for pitching and fundraising, do you see, or would you consider actually pitching to investors, and even trying to please investors and make the startup more investable rather than customer centric? What are your thoughts on this? I see Amr is also shaking his head, so after I finish with you, I'll give Amr a chance to also speak about that. But there's a lot of literature and papers about that getting investors and being focused on investors is a very dangerous thing, because what investors want is for you to give them a return on investment. And guess who's going to give you the return on investment? It is the customers. So customers number one. What are your thoughts on this, Sada?
Thank you. It's a very interesting topic. And first of all, I would like to mention, for the fund managers as well, we also do fundraising, right? And it's tough time for VCs as well. So we understand your agony, your struggle from the perspective of fundraisers. Okay, so speaking of fundraising, it's a tough process. I also don't like it at all. But how we can interpret or regard fundraising activity as more productive activity, I thought of 3 tips. Which is talking to myself as well. So the first one, I think, is fundraising is a good opportunity for you to assess the fit to investors. The goal, if you set a goal of fundraising to just get money, which is, of course, yes, part of the goal, but if you set that is the only goal, you feel very exhausted, right? Because you cannot fundraise for every single investors. But you have to do pitching, you have to do pitch deck, you have to talk a lot, that's a very mentally exhausting process. So I try to think this process as assessing opportunity to assess the fit to the investor. What I mean by that is, of course, there are some investors which targets some stage or some region or some sector, but I'm not talking not only that. How investors will interact after you get investment is also very important. Okay, like Kamel was saying, some investors push you to grow, but maybe they are very good guider, or they have a business acumen to help you grow. That's one option. There are certain investors which may try to be there and just to be supportive when they need it, and they don't push, and they have a long-term perspective. That is also another set of investors you may talk to. And of course, the rise of impact investing across the world is also help those long-term perspective investors increase more and more. So it's not only just fundraising or taking money, but also you can assess the fit to the investors, so that even after you get money, the relationship will continue. So it's very important for you to assess the fit to the investors by talking to different investors. The second tip I would say is, let's use this opportunity as a testing of your business, especially for pre-seed stage companies where they are still searching for the MVP. The investors talk to a lot of companies every single day, not only in your space in the sector, but also in other sectors. So they may have some neutral perspective, and they may be close to your potential customers' perspective. So if they say something about your business, maybe that could be the reaction from your potential customers. So it's a great free opportunity, you don't have to pay, free opportunity to take some feedbacks which are relevant to your business and improve your business itself. Not just a pitch deck, not just a pitching, but business itself. So that's another way to look at fundraising activity as a more productive thing. And the last but not least, the third thing is, let's not fundraise from investors. That's another option. Like he was saying, customers can finance you. So it used to be, I think, startups scale and then start to think of unit economics and making profit. That was the past. But because a lot of investors are now looking at the fundamentals first, maybe you could do first, let's figure out unit economics and then scale. Then you are already a profitable company, which is possible. Now, that's why you don't have to fundraise, maybe, and you can maybe talk to, you can maybe figure out unit economics first, or even you can target some other countries, which I think a lot of Egyptian startups are doing. For example, going to Saudi Arabia, because they have got bigger purchasing power. So maybe you can find a P&L part subsidizing by those big purchasing power customers, when it comes to B2B or B2C, and then we can try to scale in Egypt. That's also another option. So there's so many ways, not just by talking to investors, but other ways of fundraising to make it more productive activity, to reduce your mental stress. That's what I want to say.
Thank you, Sada, very much. And I'll pass it over to you, Amr, if you can pass the mic to Amr. Amr, when I started talking about sometimes fundraising and sometimes VCs is a distraction to startups from actually focusing on the customer, and sometimes certain VCs, because, and Sada mentioned a very important point, right? Venture capital firms are also trying to raise, are doing fundraising, right? And they are also trying to deliver good performance so they can raise their next fund. So sometimes their interests might not be fully aligned with your interest, and I think you need to be very careful. Sometimes, for example, a venture capital firm could already have 15 companies, and you are company number 16, and maybe the other companies are already in your industry, and they want you to collaborate with them because this is in the best interest of the venture capital firm. But for you as a startup or as a founder, you need to be aware of that. I mean, I had an experience with one of the startups, and he approached 2 or 3 of the top VC firms in Egypt, and then he came to us as Alexandria Ventures, and I was telling him, I mean, why aren't you more interested or working with the big VCs? They have their reputation, they're very strong VCs. He said that, when you talk to them, sometimes, I'm not saying everybody, I'm just saying that some VCs also are thinking of their other startups. If you come in and, offer something that can, disrupt another startup that is already, they are already investing in. I will take questions at the end if it's okay. So I think that is an important consideration. Amr, do you want to add to that?
Yeah, just because I think time is up, so I'm just going to say one sentence. VC startup relationship is like a marriage. So don't try to keep impressing the VC and telling them, trust me, these are my numbers, you need to... Yeah, you're going to end up with a partner that's going to make you very, very loud and sad and have a terrible experience, because it's not like you take the ticket, you take a $200, $200,000 and you go home. No. You've bought yourself a lifetime partner until death does us apart.
Very true. Although I think we had until 6:45, so I don't know how the time is over. We still have a few minutes, and we definitely want to take the question first from the person, the gentleman in the back. Please go ahead.
My name is Amr The first thing that came to my mind is that you really don't want to invest in your company because you're disrupting other companies they're investing in. The first thing that came to mind is that shouldn't that make them more willing to invest in me if I'm going to disrupt the field? Because if they don't, I'm going to approach somebody else and I'm going to disrupt their companies more.
That's a great point. It could be, but maybe it's very possible. The point I was just trying to make is that the interest might not be 100% aligned. What you want is you want your startup to succeed. What they want their portfolio to succeed and to deliver. So I think again, I am part of a venture capital firm. I'm not saying that venture capital is bad. I think venture capital delivers a lot of value, and they are a key pillar in the ecosystem. What I am just trying to say is that as a founder, remain true to your customer. Your customer is your North Star. And what we saw, for example, in the past few months, as Sada and Amr were mentioning, everybody was chasing growth, and they were forgetting unit economics. But when the winds and the tides changed, everybody pulled back, and many founders were left alone, right? So as long as if you have a problem or you're tackling a pain point for customers, right, and you're gaining traction, this is your North Star. This is how you're making progress. This is the important thing. This is the thing that, if it changes, you have to adapt to it. Shahab, you had a question? Please go ahead.
Yeah, you guys talk about mixing that very difficult to speak with this language. My question is for all of you, but I'm specifically, you mentioned the idea of you guys invest so much time in the business. I understand what you're talking about. But as you said, it's automatic. It's actually what expectations they have of the investment. They got to pre-feed the future of the investment, so they end up, putting too much faith, putting too much time in, and thirdly, so this is number one. Number two, what do you guys think of outsourcing the tech? Other people have, I get a bunch of times where people say, what work with a fintech is not something that we do, but there's an eagerness, a need for this, and there are professionals who know APC technology, who do this, and they work sometimes with the numbers, sometimes with design, so you don't actually end up with pretty much the fix the same sort of pattern. So you want not to use it.
Now, I have an interesting. I mean, I'll tell you something. There's actually one startup in the US called Slidebean. Slidebean is, by the way, I highly recommend everyone follows their YouTube channel. They have some of the best entrepreneurship content I've ever seen in my entire life. But anyways, Slidebean. So what they do is fundamentally they help founders they have like different pitch decks and different approaches on how to look at the pitch deck, and they're like super professional in this. But from first-hand experience, what I've seen with some of the best VCs, and I've been to 500 startups HQ in Silicon Valley, and they told me this. They told me we couldn't care less if the pitch deck is a Word document, as long as the founder really knows, as you mentioned, what the customer's pain points is, and they're super passionate, and they're willing to, they have enough resilience, to fail 2-3 times and come back. So that's the thing. What I want to say is, we, as founders, we have to do the right thing by doing a proper pitch deck, and I highly recommend the Dave McClure template. It's a free template on Google, 10 slides with clear steps on how to create them. But at the end of the day, is no matter how much time you put in a pitch deck, how much makeup you put, at the end of the day, proper VCs with experience, they can lead through any sort of pitch deck and any sort of data rooms and tell you, this is not on point, this doesn't make sense. Because they meet tens and hundreds of startups every day, founders every day, and I'm not sure if it's appropriate to say this word, but I honestly will say it. They have a very good bullshit radar. They can see this is BS. I don't like you. I've seen 10 people do the same startup, and I know why it fails, and while you're doing the exact same thing. And as you mentioned, Mishab,
the problem is somebody else did it right, and you're right. The supposed work of the thing, the founders should work on it, actually of testing it.
Definitely. Yeah, sure.
I agree with that. But that's the house.
I agree. I think they should work with the founder on that. Of course, people have different presentation skills. And if you're, an Egyptian and you don't speak English, it shouldn't exclude you from international investors if you have someone else on the team. But I do think working with founders on both public speaking, on being able to do those things is really important as a skill for the founders.
Yeah, just to summarize, I think mentoring is very important for one to identify mentors that can help him actually, because pitching is a skill that you have to acquire. We are not all born to pitch, but we have to learn it. And I think having mentors is very important, and I see a lot of mentors in the ecosystem. I also, the power of networking, the power of reputation, people vouching for you as a person and your reputation. I think that is also very important. It's not only about the startup, it's also about your personal reputation. Please go ahead. Okay, so the question is, it depends on the VCs. There are certain venture capital firms that are in the seed stage, very early stage, and they are willing to invest. And then there are venture capital firms that are Series A and Series B. So you have all sorts of venture capital firms. And this is one thing that is very important, that you need to map the ecosystem, and you need to be aware of which venture capital firms are interested in the stage you are in, and go and connect with these people and pitch to those people. Because there is 35 VCs that are focused purely on Egypt, and they are focused on all stages.
Is there a consultation for VCs? Can advise me which VCs can advise and manage my portfolio for my company?
for example, incubators and accelerators are there for that, to advise, to advise startups and founders. This is one thing. Does anybody know of a specific? There isn't a specific website that will list the VCs. Maybe if we find something, we can share it with you. But what you do is you need to network. Networking, you show up, you start asking people, my startup in this stage, which VCs do you think would be interested in it? This is the best way to get the information. Is there a specific website that says these VCs in Egypt are interested in that? I don't have such a website. Let's get a question from the female side. Please go ahead. In EdTech, can you raise your voice? In EdTech, right?
What is also cutting out the BS space? When you look at the pitch deck, how many seconds can we sort of decide if it's a go or no go, and what would be sort of the key things between
Okay, so let me be very brief about the answer. So first thing is that you need to talk about the market, right? The market is growing, the market is attractive, and you understand the market, you understand the segments and who you're targeting and why you're targeting it. It's very important that you understand your customer. This is the most important thing, that you understand the pain, you understand your customer. For example, when we compare Marks and Spencer to the Spanish retail apparel, Zara. Zara's actually, the success of Zara came from the fact that, the founder of Zara was a guy that was selling, standing in the shops, and he's looking at the customers coming in every day, and he's seeing the behavior of the customers. What do the customer want? And he is one of the people that revolutionized the apparel industry. The M&S's, the Marks and Spencer, and you have your models for the winter of 2023 and spring of 2024, etc. What he did was fast fashion, because he was able to tell that people are coming frequently to the shop and they want to see new things. They want to see change. They don't want to see something that lasts for the next 3 months. So understanding your customer is very important, and coming up with a unique solution to address this is very important. And the third important thing is having a team that has all the skill sets, right? So for example, if everybody is a software engineer, 5 people, or everybody's a software engineer, this is one team. But another team is, you have one that is a very strong techie, another one that's a very strong marketing guy, and then another one that's a very strong financial person. If you get the right skill set, this is the thing that is important. And I think another thing that is very important is the big picture, the vision, the aspiration. What do I want to do? Do I want to change? I want to improve the quality of life of people. For example, in education, like EdTech, I want to help people. I want to bridge the gap between the skill sets that people have and what they actually, what the market actually needs. I really think that this is something that is very important, and I want to really help people on this space, and this is how I'm going to do it, and these are the various pillars. And I want to be, just a figure, I want to have 50% market share of EdTech or educational services in Egypt online, and this is how I'm going to do it. You have to have a vision, and you have to understand the market and how big the market is and how you are going to grow. I personally do not invest in any startups until I do an exercise that is called a causal model, a flywheel exercise, to understand how the various, it's a systems thinking approach to growth that is very important. How do the various parts come together, and what are the things that you're going to prioritize to achieve the growth? This is also very important.
Thank you so much. I'm sorry I have to interrupt.
Thank you very much, and thank you for
Please give them a big round of applause.
Thank you.